Cheddar Flow. Let's get stuck in.
A designer who built interfaces at two of the most user-friendly companies in Silicon Valley looked at options flow data in 2018 and saw a design problem. The data existed, but the interfaces were so poor that the people who needed it most could barely use it. He built sub-second latency, alerts filtered by machine learning to separate directional trades from hedges and Darkpool analysis that identifies where institutional volume clustered. The community rates it 4.1 out of 5. A competing platform with an anonymous founder and 1 million followers rates 4.8 and costs $500 less a year for the same underlying data. The designer built the better tool. The competitor built the better value. And neither solved the problem that high-frequency algorithms are already positioned against the retail traders, following the signals both platforms display. The founder designed products at a payment processing company that simplified card transactions for small businesses, and a website builder that made professional web design accessible to non-technical users. Both companies succeeded because of design quality. Both faced the same challenge his options flow platform would later face, making complex underlying technology accessible to people who do not care about the complexity itself. In 2018, he looked at the options flow landscape and saw interfaces that required significant expertise just to navigate. The data was available, the presentation was the bottleneck. He founded the platform in San Francisco in June 2018, 2 years before the anonymous competitor that would become its primary rival even existed. This is important context. By the time that competitor went viral during the meme stock era, this platform had already been building and refining for 2 years. The target user is explicitly not a beginner. This is a strategic choice. The beginner market is larger but produces more churn when users discover options trading is difficult. Experienced traders with accounts above 25,000 have lower churn, higher willingness to pay, and specific technical requirements that a designer can optimize for. The platform is bootstrapped with no outside investment, no affiliate marketing model, and a public founder who is accountable by name. The community is small compared to the million-follower competitor. The social media presence is minimal. Growth comes through word of mouth among serious options traders and comparison reviews rather than viral content about congressional stock trades. The pricing reflects the premium positioning. The Pro tier costs roughly $900 a year, which is more than double the anonymous competitor, but significantly less than the signal generator or the news service in this series. The 48-hour self-service refund window is more user-friendly than the hardship-only policy at the publicly traded competitor and the no refunds after trial policy at the anonymous platform. A 7-day free trial allows evaluation before committing. The core product aggregates real-time options trades from the same consolidated reporting authority every platform in this series uses. What Cheddar Flow changes is what the subscriber sees. The machine learning layer attempts to classify each flow alert before it reaches the user, filtering orders that fit patterns associated with hedging or portfolio management from orders that fit patterns associated with directional positioning. This is the specific problem that raw flow platforms leave entirely to the user. When a large put sweep fires, is it a bearish directional bet or a hedge on an existing long position protecting gains? The machine learning attempts to answer that question before the alert reaches the subscriber. The community consensus is that this produces a cleaner signal than raw unfiltered flow, but does not eliminate the fundamental problem. A correctly classified directional order still does not guarantee a profitable trade. The Darkpool analysis is the most technically differentiated feature. Rather than showing that institutional volume happened at a given price, the platform analyses where that volume clustered over time and presents those price levels as potential support and resistance zones. The reasoning is that institutional traders who bought heavily at a specific level may defend it when the price returns. The caveat is that Darkpool direction is unknown. The platform identifies the levels, but not whether the volume represents buying or selling. The support and resistance interpretation is an inference. The charting integration with a major browser-based platform allows traders to overlay flow data directly onto their technical analysis rather than switching between applications. The programming interface on the Pro tier serves algorithmic traders incorporating flow data into their own systems. What the platform does not have includes any congressional trading tracker, any community chat rooms, any news feed, any backtesting capability, and any paper trading environment. The watchlist is limited to 50 tickers on the Pro tier. which is an arbitrary constraint for serious traders monitoring a broad options universe. The most important structural concern in this entire series was articulated in a late 2024 discussion among algorithmic traders. High-frequency firms use retail options flow following as a tradable signal against the retail traders doing the following. A large options sweep fires. Retail traders across every flow platform receive the alert simultaneously. Thousands attempt to buy the same options. The high-frequency algorithms, having anticipated this predictable retail behavior, are already positioned on the other side. Retail traders pay higher prices for options the algorithms are selling to them. When the retail momentum exhausts, the position moves against the retail buyers. This is not the platform's fault. It is how options markets work when retail flow following becomes large enough to be predictable. But it is the reason no options flow tool produces the edge its marketing implies. Cheddar Flow's machine learning classification partially addresses this by filtering out more noise than raw flow displays. Whether that filtering is sufficient to overcome the structural disadvantage of being on the predictable side of an institutional trade is not proven. No platform in this series has published evidence that its flow alerts produce net positive returns for subscribers after transaction costs. The industry trend since 2023 has been toward machine learning classification as a standard feature rather than a differentiator. What this platform pioneered in its category is becoming a baseline expectation. Sub-second latency is similarly becoming standard. The design advantage remains, but the technical moat is narrowing. The machine learning makes the signal cleaner. The market structure makes the signal less valuable than it appears. Both of these things are true at the same time. Cheddar Flow, for anyone who wants the cleanest options. Flow interface available, where machine learning filtered alerts, Darkpool support, and resistance zones and sub-second latency serve experienced options traders who use flow data for confirmation rather than as a primary signal. Accepting that the Pro tier costs roughly $500 more per year than the anonymous competitor for the same underlying data source, that the community rates it lower than that competitor despite the cleaner interface, that the 50-ticker watchlist limit constrains serious monitoring, that no backtesting validates whether the filtered alerts produce historical edge, and that the structural problem of high-frequency algorithms positioning against predictable retail flow-following behavior applies regardless of how well the machine learning classifies the orders. The best interface in the series, the second best value. The platform that treats its subscribers as professionals rather than beginners. Built by a designer who understood that the data was never the problem, the way people saw it was. Whether that design premium justifies the cost over a cheaper platform with the same data depends entirely on whether you are trading with your own analysis and using flow for confirmation or following flow alerts as trade signals. For the first trader, this is a credible professional tool. For the second, the $500 a year difference buys a better looking version of the same structural limitation. Every choice is a trade-off. At least now you know what you're trading.